welcome. You're watching Your Money Matters here at NDTV Profit. I'm Mahima Vachrajani, and this is a show where we talk about personal finance, taxation, etc. And today, the two topics that I've chosen, both are related to taxation. First is going to be talking about how gifts are taxed in India. What are the various provisions that you should know about? What are the events where gifts are taxable? What are the events where gifts are not taxable, etc. Is something that we're going to take up with Neeraj Agarwala. And the second one is that because we're very near to the deadline of ITR filing, we're going to talk about the old versus new tax regime. Just a refresher one is what we're going to do for you in the second segment. But first, let's talk about the taxation of gifts. And to take this conversation ahead, like I mentioned, we are joined by Neeraj Agarwala, who's a senior partner at Nangia and Co. LLP, joining us now. Neeraj, thank you so much for taking out the time, and pleasure speaking with you. My first question to you would be whether gifts are taxable in India. What are the provisions in place? What are the circumstances under which they are taxable? What are the circumstances under which they are tax-free? If you can give us some perspective on that.
Hi, Mahima. Thank you for having me on your show. Broadly speaking, in India, as per the Income Tax Act, a gift is a taxable transaction. So if there is any gift given by any person, received by any other person, would typically be taxable. There are some threshold limits, there are some exemptions, and I can elaborate on them as we go forward. So to start with, the gifts have been divided in three different categories. One is a monetary gift, where you actually receive a check by way of cash or RTGS, so you receive some money. The next category is immovable properties, and the third category is movable properties. So the rules are slightly different in each of the cases, but by and large, if you receive any of these three, gift will be taxable. This income will be treated as income from other sources in the hands of the recipient. So the donor who makes the gift, there is no compliance required at his end, but the recipient, the donee, this income will be treated as income from other sources, and he will have to pay the appropriate taxes.
Okay.
So now if we talk... Sorry.
Sure, go ahead. Please, go ahead.
So now if we talk about these individual categories, for the monetary limit, so if you receive any gifts in the form of money, and cumulatively, if these gifts exceed 50,000 rupees, then you will be taxable. We should be aware that this 50,000 limit is a threshold limit. So if you receive 49,900, nothing is taxable. But if you receive 50,001, then the entire 50,001 rupee will be taxable.
Got it. Okay.
Okay. For him, sure. You have
complete.
The next category. The next category is for movable properties. If you receive a movable property, which is more than, where the stamp duty value is more than 50,000 rupees, and if you've not paid adequate consideration, or you've not paid any consideration, then you will again be taxable. Out here, the monetary limit of 50,000 is per property. And lastly, it is movable properties. Now, movable properties, there is an exhaustive list. You should see whether the property that you have received is covered in this list or not. And here, the threshold limit of 50,000 is the aggregate of all movable properties. So if you've received, let's say, shares of 20,000 over 3 tranches during the year, which is 60,000, that means you've received more than 50,000 of movable properties, and the entire 60,000 worth of shares will become taxable in the hands of the recipient.
So Neeraj, you talked about the 50,000 limit with regards to gift. Just wanted more clarity on that. When you say 50,000 limit, if you cross that limit, do you think the entire gift amount will be taxable, or excess of that 50,000 will be taxable?
No, the entire amount will be taxable. This 50,000 is only a threshold limit. It is not an exemption.
Okay.
So like I explained, if you receive 51,000, then the entire 51,000 will be taxable, and not only the 1,000 which is in excess of 50,000. The entire 51,000 will become taxable.
Got it. And if we talk about occasion specific,
Yes.
weddings is where, if I'm not wrong, the gifts are non-taxable. But if these gifts are received on birthdays or any other occasion for that matter, festivals, etc., how does the taxation fare here?
Correct. So there are certain exemptions that have been provided in the Income Tax Act where gifts received are not taxable. So one is, of course, relatives. We can discuss that again later. The other is on the occasion of a marriage. So if any gifts are received by the bride or the groom during the occasion of marriage, any kind of gift, any monetary limit from any person, it is not taxable. Any other occasion, like let's say a griha pravesh, a birthday, anniversary, every other occasion will be considered. Any gift received for those occasions will be considered as a taxable event, and the recipient will have to pay taxes on that gift.
Okay. Now, with regards to mutual funds, how do you view taxation there? You talked about movable, immovable property, but specifically for mutual funds, because that trend has picked up quite a bit, gifting of mutual funds. Give us more details on how that particular asset is taxable.
So like I said, there is three categories. One of the category, which is a movable asset. So within the definition of movable asset for the purpose of gift, shares and securities have been identified as a movable asset. Now, there is one school of thought which says that a mutual fund will not get covered under shares and securities. However, if you take a conservative view, I believe mutual funds will be covered under shares and securities, and you will have to pay taxes on the amount if that gift in aggregate is more than 50,000. And for mutual funds, you'll have to take the fair market value and pay taxes on that amount.
Okay. And I believe for gold also the provision remains the same.
Yes. So movable asset, like I mentioned, there is a specified number of assets which have been defined as a movable asset for the purposes of gift tax. So that includes gold, jewelry, art, shares, securities, and likewise.
Got it. In the event of a gift which is of a very high value, what are the documents that the receiver needs to definitely keep in order to avoid any scrutiny?
So I think a gift deed is definitely something that you should draw between the donor and the donee. The gift should be properly titled. It should mention the purpose. So you should say that the gift is made out of love and affection. You should mention the asset which is being gifted. So if you're gifting, let's say, a transfer of money by RTGS, you should mention the amount. You should mention the date. If it is shares, then you should mention the name of the company, the quantity. This gift deed should be signed by the donor and the donee. The donee should accept the gift. It should ideally be also signed by two witnesses. And if required, as per law, it should also be registered. So especially in the case of immovable properties, the gift will be incomplete if it is not registered. So especially, like I said, in the case of immovable properties, the document stamp duty should be paid as per law and it should be registered.
Okay, just circling back to that 50,000 part, is that just per gift limit, or is it a combination of gifts that you get from one particular person?
This 50,000 has to be tested, not per gift, but it has to be per category of gift. So for monetary gift, for money, it is 50,000 in aggregate.
Okay, got it.
For immovable property, it is 50,000 per property.
Okay.
And for movable property, it is again aggregate. That means all movable properties received should not exceed 50,000.
Got it. Understood. What about gift that you receive from your employer? How is that viewed and how is that taxed?
So gift is typically between two people, made with love and affection and with no other consideration. The moment the person is an employer, then it gets covered as salary, and there are completely different set of rules, sections, provisions which deal with those situations. And in all probability, it will be taxed as a perquisite in the hands of the employee. But that won't be under the gift tax, which is income from other sources, but it will be taxed as salary, as income from salaries.
Neeraj, the other aspect is there's also an involvement of the definition of relative in gift taxation, right? How
Yes.
is that accounted for when you consider gift taxation? Who is a relative? What's the definition? How is that being taxed when received from a relative, etc.? Can you give us more color on that?
Sure. So like I mentioned, there are certain transactions, gift transactions, which are exempt from gift tax.
Correct.
So any gift which you have received from a relative will be exempt. So you don't need to pay, the recipient will not need to pay any gift tax on that amount. Again, the word relative has been very specifically defined under the Income Tax Act. So it is typically your spouse, it is your lineage, descendants and ascendants for both yourself and your spouse. And then there are, so like your grandfather, your grandson, your spouse, her brothers, her sisters, all of them are covered under the definition of relative. But you have to be careful. So like a cousin brother is not covered under the definition of a relative. So whenever you receive a gift, you should definitely open the act and see whether that individual is covered under the definition of relative. And also one should remember that when you are testing the relationship of whether he's a relative or not, it has to be done from the perspective of the recipient.
Okay, all right, got it.
So,
sure, go ahead.
So interestingly, there could be a case where an uncle can make a gift to to a niece, but a niece cannot make a gift to the uncle, so there could be such a situation, and we need to be careful about that.
Got it. All right. Just one last question from my end, Neeraj, is that what are the misconceptions generally that people have around gift taxation, and what are these, of course, what are these misconceptions, and what should one keep in mind?
So I think a lot of times what happens is when you gift, let's say, a shares, you draw a gift deed and you think that the matter is closed. It's not actually that. You should also be careful that once you've effected a gift, there could be clubbing provisions which would be triggered. So to explain to you, let's say if I gift my wife certain shares, then definitely it won't be taxable as a gift in the hands of my wife. But what we should be careful is if there is any capital gains or any dividend income which my wife receives from the shares which I had gifted to her, that income will be clubbed in my hands. So there are very specific clubbing provisions, and I think a taxpayer should be aware of that, especially in the case of gifts.
All right, got it. Neeraj, thank you so much for taking out the time and taking us through that entire perspective of how gifts are being taxed. I'm sure that our viewers learned a lot on that topic today. Thank you so much.
Thank you so much. Thank you for having me here.
All right, viewers, so that is the segment where we talked about gift taxation, but it's time to slip into a very, very short break. On the other side of the break, we're going to talk about old tax versus new tax regime, so do stay tuned in.